Welcome to the stock market. Your adventure begins. Investing in the stock market can be exciting. It's a chance to grow your money and achieve your financial goals. Think of it as planting seeds for a fruitful future. Many people think investing is only for experts. That's not true. You can start investing too, even with a little bit of money. In this guide, we'll break down the basics of stock market investing. You'll learn how to buy stocks, different types of stocks, and strategies to help your money grow. Get ready to become a confident investor. What exactly is a stock? Let's break it down in simple terms. Imagine your favorite company is a pie. This pie represents the entire value of the company. When you buy stock, you're buying a slice of that pie. Essentially, you become a part owner of the company. Companies sell stock to raise money. This is often done through a process called an initial public offering, or IPO. They use this money to grow their business, whether it's expanding operations, developing new products, or entering new markets. As a stockholder, you can benefit from their success. When the company performs well, it often leads to an increase in the stock price. When a company does well, its stock price goes up. This means the value of your slice of the pie increases. That means your slice of the pie is worth more. You can see your investment grow over time. You can then sell your stock for a profit. This is known as capital gains. Of course, stock prices can also go down. This can happen due to various factors like poor company performance, economic downturns, or market volatility. That's why it's important to invest carefully and for the long term. Diversifying your investments and understanding the risks can help you make better decisions. Diversification means spreading your investments across different companies and sectors. This can help reduce risk. Consulting with a financial advisor can also provide valuable insights and help you create a solid investment plan. Remember, investing in stocks is a long-term game. Patience and informed decisions are key to building wealth over time. By owning a slice of your favorite companies, you can be part of their journey and potentially secure your financial future. So start small, stay informed, and watch your investments grow. Happy investing. The stock market is like a giant online marketplace. It's a dynamic and ever-changing environment where fortunes can be made or lost in the blink of an eye. This is where buyers and sellers come together to trade stocks. These transactions happen every second of the trading day, creating a vibrant and fast-paced atmosphere. Think of it like Amazon, but instead of books and clothes, they trade pieces of companies. Just as you might browse for the best deals on a shopping site, investors look for the best opportunities to buy or sell shares. When you buy a stock, you're buying it from another person who wants to sell it. This exchange can happen in a matter of seconds, thanks to modern technology and online trading platforms. The price of a stock depends on supply and demand. If a company is performing well and investors believe it will continue to do so, more people will want to buy its stock. If more people want to buy a stock, the price goes up. This can lead to a surge in the stock's value, benefiting those who already own shares. If more people want to sell it, the price goes down. This can happen if a company reports poor earnings or if there's negative news affecting the market. The stock market can seem complicated, but it's simply a platform for trading shares of companies. By understanding the basics of how it works, you can start to navigate this exciting world of investing with more confidence. Education and research are key. The more you learn about the stock market, the better equipped you'll be to make informed decisions. There are countless resources available, from books and online courses to financial news and expert analysis. Remember, investing in the stock market carries risks, but it also offers the potential for significant rewards. By staying informed and making thoughtful choices, you can work towards achieving your financial goals. So, whether you're a seasoned investor or just starting out, the stock market offers opportunities for everyone. It's a place where you can grow your wealth and be part of the global economy. Embrace the journey, stay curious, and keep learning. The stock market is a fascinating and rewarding place for those who take the time to understand it. Ready to buy your first stock? It's easier than you think. Investing in the stock market can seem intimidating at first, but with the right guidance, you'll be navigating it like a pro in no time. Let's break it down into simple, manageable steps. Here's a step-by-step guide. First, choose a brokerage app. This is your gateway to the stock market, where you'll buy, sell, and manage your investments. There are many options out there, so take your time to find one that suits your needs. A brokerage app is like your online stock shopping cart. It allows you to browse through thousands of stocks, ETFs, and other securities. Think of it as your personal stock market assistant, helping you make informed decisions. Popular options include Robinhood, Fidelity, and TD Ameritrade. Each of these platforms offers unique features, so explore them to see which one aligns with your investment goals. Next, open an account. This process is straightforward and usually takes just a few minutes. You'll need to provide some basic information, like your social security number and bank account details. This is necessary to verify your identity and link your bank account for funding your investments. Then fund your account. Deposit money into your brokerage account. This is the capital you'll use to buy stocks. Most platforms offer various funding options, including bank transfers and wire transfers. You can start with a small amount, even $50. Don't feel pressured to invest large sums right away. It's perfectly fine to start small and gradually increase your investment as you become more comfortable. After that, research and select a stock. This is where the fun begins. Dive into the world of companies and industries that interest you. Look at their performance, financial health, and market position. Look for companies you understand and believe in. It's important to invest in businesses that you can relate to and have confidence in. This will make it easier to follow their progress and stay informed about their performance. Consider their products, services, and future potential. Think about the company's growth prospects and how they fit into the broader market trends. Are they innovating? Do they have a competitive edge? These factors can influence your investment decision. Place your order by entering the stock symbol, which is a unique code for each company, and the number of shares you want to buy. The stock symbol is like the company's unique identifier in the stock market. Finally, review and confirm. Double-check all the details before submitting your order. Make sure everything is correct, from the stock symbol to the number of shares and the total investment amount. This step is crucial to avoid any mistakes. Congratulations, you're now a stockholder. You've taken your first step into the world of investing. Remember, the stock market is a long-term game. Stay patient, keep learning, and watch your investments grow over time. Section 5. Exploring different types of stocks. Not all stocks are created equal. There are different types of stocks, each with its own characteristics. These are stocks of companies that are expected to grow quickly. They often reinvest their profits back into the business. These stocks pay out a portion of their profits to shareholders regularly. They can provide a steady stream of income. These are baskets of stocks that track a specific market index, like the S&P 500. They offer instant diversification. Choosing the right type of stock depends on your financial goals and risk tolerance. Section 6. Strategies for beginners. Growing your investments. Here are some beginner-friendly strategies to help you grow your investments. Invest a fixed amount of money at regular intervals, regardless of the stock price. This helps reduce the impact of market volatility. Choose companies whose products or services you use and understand. This makes it easier to track their performance. Be patient and think long-term. Aim to hold your investments for at least 5 years to ride out any market fluctuations. Remember, investing is a marathon, not a sprint. Slow and steady wins the race. Section 7. Understanding the risks of investing. Investing in the stock market involves risks. Stock prices can go down and you could lose money. Here's why. The stock market can be unpredictable. Prices can fluctuate due to economic conditions, company news, and investor sentiment. If a company you invest in performs poorly, its stock price may decline. Interest rates, inflation, and recessions can all impact stock market performance. While risks are inherent, it's important to remember that investing is a long-term game. Over time, the stock market has historically trended upwards. Section 8. Keeping track of your investments. Once you've invested, it's essential to track your portfolio's performance. However, don't obsess over daily price changes. Most brokerage apps provide tools to monitor your investments. You can see your overall returns, individual stock performance, and portfolio diversification. It's a good idea to review your portfolio periodically, maybe once a month or quarter. Make adjustments if needed, but avoid making impulsive decisions based on short-term market swings. Remember, patience and a long-term perspective are key to successful investing. Section 9. Embark on your investing journey. Today, congratulations, you've completed this beginner's guide to stocks. You've learned the basics of investing and how to get started. Remember, investing is a powerful tool to build wealth and achieve your financial dreams. Start small, invest consistently, and stay focused on your long-term goals. The journey of 1,000 miles begins with a single step. Take that step today and start investing in your future.